Always throwing a stock of the day. It's the start of AGM season, and thought we'd have a look at Baby Bunting. Its share price being absolutely hammered today to a 2.5-year low after the retailer saw margins contract in the past quarter. The business saw sales growth of 12% between July and October, and like-for-like sales growth of 7.6%. Look at that, down 25% just today. Now, we've been sort of talking about the upcoming AGM season a lot here on the call because none of Australia's major companies, or very few of them, gave guidance when they reported for the June financial year. A lot of analysts wanting some guidance and more up-to-date results in the annual general meeting season. Baby Bunting, a really popular retailer amongst analysts. Rudy, is this a precursor of things to come with retailers?
It doesn't have to be with retailers, to be honest.
Right.
If we take a quick look into the United States, we have quite some international companies warning or disappointing or downgrading guidances, the likes of Nike, Apple, Tesla, FedEx. I guess this is not a good opening to the season. As you said earlier, I am particularly quite worried about the earnings outlook for the next 12 months, and particularly the next 6. I think February next year hopefully is the low in the cycle, but between now and then a lot can happen. You're right in saying this is widely regarded as one of the, let's call it, the more resilient.
One of the best.
One of the resilient.
Well, when panelists here on the call talk about retailers, they go, we like Universal Store and Lovisa because it gets to a younger demographic that don't have a mortgage. That's fine. And Baby Bunting, who's going to cut costs on a new baby. So that should be resilient.
But
this is showing maybe not.
But it also shows you that it's not just about the top line. I mean, and that this is also what for example, what has held back this year the supermarket operators in Australia. I mean, you're battling with costs, and if you can't isolate the costs and temper it, then you get big disappointments.
So you're looking at margins.
Well, it is basically so if you have to discount in price, which I'm assuming Baby Bunting doesn't have to, that's one positive. But if the costs are still weighing on margins, then obviously the 12% increase in the top line is not enough to compensate. And this will be one of the themes, I think, between now and February as well for a lot of companies. So it becomes down the ability.
Mainly retailers or generally industrials?
Absolutely. I mean, if we go back a few months before the August reporting season, the big disappointment came from the gold producers. I mean, which had a similar problem. Top line not growing in their case, and costs just, can't keep costs limited. So you see all the share prices are pretty low for gold producers. That's one of the problems for supermarket operators had a problem. So in terms of inflation, it's not just the top line that counts. You have to watch what comes from the bottom.
So
I would still, I mean, if you're interested, I would still think that after a shellacking like today, someone with a long-term view can snap this up. And
so you'd see it as a buy after.
This is. I mean, if you take a longer-term view, they are still the number one in that particular segment, and I don't think that we're going to have no more babies. So they will ride the ship at some point, but you may have to be patient. But you know what helps? Big dividend yield. And these guys have a big dividend yield, in particular after today.
Okay. Tim, what do you think of Baby Bunting and the update today at the AGM?
Yeah, I agree. I mean, this is sort of a delayed reaction. This kind of had to happen at some point, right? Where the households and the spending pulls back a bit. Baby Bunting was really a darling of the smaller mid caps and trading on a really high multiple. It's just sort of now pulling back to normal ranges. The number of stores open was only 2. That's a big hit to their growth rate. I recently had a son, and we did go to Baby Bunting a lot, to my chagrin at the start, but we just started using more and more Facebook Marketplace to get secondhand stuff because it's just so much more cost effective. And I think a lot of households will do that as inflation bites and as things slow down. So certainly I agree on the long term, this is definitely a buy. could have some more downside in it a little bit, but on the current multiples, it looks good. I'd have it as a buy. Just wait it out, and it's a good long-term hold.
So, Tim, does this mean you're reassessing all of the retail sector at the moment? Does Baby Bunting's update today spook you at all with some of your favourite retailers, and you think, oh God, is this going to be the theme?
I think some of them have been hit really hard already. Like, for example, like West Farmers that's already taken quite a beating. But once the fixed rate mortgages drop off and everyone goes to variable, I think we're going to have this flow through, just like we're seeing through the US.
Right.
The iPhone sales being down, all that sort of stuff. It is coming through, so earnings downgrades are likely.
Right.